So, last week of the October was great, right? Was excited. But if you think that the next one, the first week of the November, is going to be boring, then you have to rethink, you have to check the calendar one more time. Well, US election, the point number one, FOMC, point number two, and the non-farm payrolls, point number three. Of course, the main question of the week is who's going to be the next president, right? And how eventually that could influence the market, especially euro-dollar, oil and gold. With the last week of the October, we've seen the breakdown when it comes to the euro-dollar through 117, much lower levels when it comes to the oil, but the gold was trying to hold the ground. What's going to happen with the first week of the November? Well, without a further delay, let's jump straight and check the charts. Right, let's start with euro-dollar monthly chart. New month, new opportunities, and as you can see, when it comes to what happened in September and October, 2 months of the euro selling reaction into the possible supply zone. Well, the thing is that we not quite drew the nice swing high. So still from the monthly chart perspective, retest of the levels 1960 could be in place, and that's where I think the bears are waiting to try to take the advantage eventually of the kind of the spike around the election, US election, around the FOMC, or maybe around the non-farm payrolls, and from here they're going to try to start to take the advantage of 115, 114.50. We discussed it quite a few times. Here, that's gonna be the challenge, because your homework is to check dollar index chart, guys. And if euro dollar is going to fall towards 115, 114.50, it could translate into the dollar index testing strong supply. So for now, as long as we are below 1870, 60, as we are below 118.60, 80, 119.60, the way is open down towards 115, 114.50, where I do expect some kind of the demand based on the big breakout, right? So the sellers 1860, 1960, buyers 115, 114.50. That's how I see the euro dollar from the monthly chart perspective. Let's have a look what we have from the weekly chart perspective, because it could be the name of the range we discussed quite a few times, and if we are going to break through and double that range, right, that's what we are going to get. 115, 114.50, this breakout level over here. And from the daily chart perspective, euro dollar, with all those cases related to the COVID, quite good move to the downside, with Friday retest some nice supply around 117, something we discussed. I've been waiting for the closing gap or levels close to 118, so that could be the case from the intraday perspective, looking for 117.20 or 118 when it comes to the euro dollar from the intraday perspective around the US election, around the FOMC, trying to grab a few pips here, few pips there. I think that quite good chunk of the stops below 16.25, right, and that could easily open the way down to 114.50. So that's euro dollar. Let's switch to crude, and here we have a breakdown as well. That's something we discussed also lately. So we were bouncing inside the gap, right, creating some kind of the range. Okay, lately, last week, towards the end of the month, we broke through testing 35. So that's the last level of some kind of the bullish activity, I would say. Otherwise, if we are going to break through the latest weakness somewhere here down towards 29 and 25 based on the monthly chart on the Liteforex platform, so the top and 50%, that's where we might see eventually oil going into, right? Well, of course, if we are going to break through the top of that range, if we are going to break through 43.50, 44, that's, as we discussed, could lead to the quiet big rally on the oil towards 64. And I've seen some analysis, I couldn't confirm it. If I have something more about that, I will let you know. But I've heard that if the Joe Biden is going to be the next US president, really the oil and the oil sector overall got the chance for some kind of the rally. That's the one thing. On the other hand, something we are discussing with the US election day, part 1 and part 2. The thing is, if the market is going to get back to reality, or we are going to be on the steroids from the Fed, if that's gonna be the case, if the Fed will pump the stocks, then oil really got the chance instead of to make the false break to the downside and huge rally. But we will see. For now, because of what we've seen, the downside might be open. There might be some, at least, manipulation lower at the beginning of the week to try to clean more stops, right? And then eventually, depends on the election outcome, and the overall situation might be turned around. But if we are going to clearly break to the downside, then 29.25 could be on the way when it comes to the oil. And finally, gold still holding levels around 1850. Okay, the low over here. I thought that we are going to last week grab few stops to the downside, still below 1950, 2000, and we are discussing the move to the downside based on the own way. And if we are going to break that 1850, that could lead to 1800, the bottom of this breakout candle, 1810, 1800, and then 1750, somewhere inside this consolidation, 1750, 1740. Again, below 1950 and 2000, I think more downside could be in place. If we are going to break 1850, it could open 1810 and 1800. Below 1800, 1750, 1740. That's how I see the gold ahead of the US election, FOMC, and non-farm payrolls next week. Stay safe, guys. Do your own research. Work with your exposure. Have a great trading week. See you around. Take care and goodbye.